morning, guys. Can you hear me? Good morning, guys. Can you hear me? Can you hear me? You're welcome. Good to have you in today's session. How are you doing? Sure, you're having a great time. So excited to have you in the class. So excited. There's so much opportunity, very good setups on the chat, and I'll be sharing my biases on most of the currency pairs in the next few hours. Okay, you're welcome. You're welcome. If you can hear me, I want you to drop your comment if you can hear me. If there's any instrument, any currency pair you want us to analyze together, please drop it in the comment section. You are welcome. You are welcome. If you can hear me clearly, I want you to drop a comment. Drop a comment. Okay, so let's start with gold. So today, my bias for gold is bullish. Okay, my bias for gold is bullish. I expect gold to close above the high of this bearish candle. That is when I will consider buying gold. Okay, that is when I will consider buying. For the past few hours, gold has been in a range, and you could see that buyers have been trying to break the high of this bearish candle and also the high of this bullish candle. The fact that they have not been able to push price above the high of these two candles indicates that the bears are still in control. Okay, so for us to buy, we need to wait for a candle to close above the high of those candles. That is when we would consider buying. At the moment, the bears are still in control. Okay, the bears are still in control. Let me go back to daily. Let me go up to daily. So you can see how yesterday candle closed. You see how yesterday candle closed. We had a support. Can you see? This was a support, and also this was a support. So price tested that support, and there was a strong rejection from that support. Can you see that? There was a strong rejection from that support. Good morning, Mr. Eze. Can you hear now? Am I audible now, Mr. Eze? Am I audible now? Please ensure your volume is at its peak. Ensure your volume is at its peak. Okay. So yesterday, gold tested this support level, and you can see that there's a strong rejection from that support. Now, after the close of yesterday candle, the next thing to do is to go down to 4-hour time frame. Okay, we'll go down to 4-hour time frame. Let's see what we have on 4-hour after the close of yesterday candle. So you could see yesterday a candle closed bullish on 4-hour, but like I said, it didn't close above the high of this previous bearish candle. If it had closed above the high, that would have confirmed that there are buyers in the market and one can risk buying. But the fact that it didn't close above it indicates that the sellers are still in control. Okay, so let's go down to 1 hour. What's happening on 1 hour? So you can see also on 1 hour, price has been in a range. Okay, so if you want to buy gold, wait for price to break this supply zone, or you call it your resistance zone. Okay, wait for price to break that resistance zone before you buy. You cannot buy gold at the current market price. Okay, wait for price to break that resistance zone. Now, what I think is going to play out is this. Okay, so you can see we had a resistance here. Can you see that? That's the resistance which became a support. Okay, this is the resistance which became a support. So if this support holds, that is, if a bullish reversal pattern forms at this support, we might want to go in. Okay, we might want to go in. We might want to buy if the candle that closed at this support is a bullish reversal pattern. Okay, so if it closes as a bullish reversal pattern, you might want to patiently wait, okay, for price to close above this resistance. Okay, if you don't want to wait for price to close above that resistance before you buy, after the formation of the bullish reversal pattern at that support, go down to 15 minutes and 5 minutes time frame. Okay, and ensure that on 5 minutes there is a shift in market structure. I hope you get that. If you don't want to patiently wait, because if you look at it from, if a candle, let's say a candle close at this price, and you wait for price to get to this level before you buy, from this point to this point is about 60 pips. Okay, from this point to this point is about 60 pips difference. Okay, so if you don't want to wait, go down to 5 minutes and ensure there's a shift in market structure on 5 minutes. I hope that is clear. Mr. Nayo, Mr. Eze, I hope that is clear. Okay. So my bias for gold today is bullish. And if I'm buying gold, my first TP will be at this level because we have stop losses at this level. Okay, that's where liquidity resides. And also, this will be my second TP on gold. I hope that is clear. That's my bias on gold. And if gold breaks this support, there's a high probability that price will keep going down. Okay, if it breaks that support, there's a high probability that the price of gold will keep dropping. Okay, so if you are buying above this level, your stop loss could be at this level, okay, or few pips below this level. That is where you should set your stop loss. Few pips below the candle that will form at this support or at this level. Mr. Stanley, I can see you. Mr. Oludo, I can see you. You're welcome. Okay, let's move to the next page. So that's my bias on gold. I am bullish on gold. But if this support is broken, my bias becomes invalid, okay? But I'm looking for buy on gold, okay? If there's any instrument you want us to analyze together, drop it in the comment space. Let's move to the next page. GBP, okay, Australian dollar USD. Okay, my bias also on Australian dollar USD is bullish. Okay, my bias on Australian dollar USD is bullish. So let's start with the daily time frame. What do we have on daily? So you can see Friday candle closed bearish. No, sorry, Monday candle. Monday candle closed bearish. Okay, and you can see how Friday candle closed. It closed as a spinning bottom. Friday candle closed as a spinning bottom, which indicates change in trend from bearish to bullish. But because the body of the candle is bearish, we can't just jump in and start buying. Okay, we can't jump in and start buying. Before we would buy, we need to ensure that a candle closes above the high of this spinning bottom. Okay, so you can see yesterday candle. You can see what happened yesterday. They tested the high of that spinning bottom. You can see price tested the high, but it didn't break above that high. Can you see that? Also, today's candle, you can see it has tested the high of yesterday candle. It has tested the high of yesterday candle, but it has not broken that high. It is when the high is broken, the high of yesterday and Friday candle is broken, that will be the right time to risk buying Australian dollar USD. So at the moment, the bears are still, in the market. So for us to buy, we need to wait for a candle to close above 0.6519. Okay, 6519. So if you are buying above 6519, your TP, your first TP could be at this level. Okay, second TP could be at this level. Okay, these are areas of liquidity. These areas I'm identifying are areas of liquidity. At these levels, there are stop losses at this level. Okay, so that's my take on Australian dollar USD. I'm looking for a buy setup on Australian dollar USD. Let's go down to 4 hour. After the close of yesterday candle, let's see how the 4 hour can. Okay, you can see on 4 hour. On 4 hour, you can see we had inverted hammer on 4 hour yesterday, which indicates change in trend from bearish to bullish. Can you see that? Now on 4 hour, this was the last bearish candle, okay, that formed before this inverted hammer. Before this inverted hammer. And as you can see, the previous 4 hour candle, you can see the previous 4 hour candle has closed above the high of this bearish candle. So if we go by the setup we have on 4 hour, buyers are showing up in the market. One can risk buying. One can risk buying because a 4 hour candle has closed above the high of this bearish candle. But I would advise you wait for a candle to close above this level. Okay, that would be a strong confirmation. Okay, that would be a strong confirmation. So that's it on USD, Australian dollar USD. Okay, let's just see what we have on 1 hour. Okay, let's see what we have on 1 hour. So if 1 hour candle closes bullish, if the current 1 hour candle closes bullish, as you can see, we had a support here. Can you see this? So if the current 1 hour candle closes bullish, one can risk buying. Okay, if current 1 hour candle closes bullish, one can risk buying. Okay, now before we buy, we need to go to 15 minutes, 5 minutes, or 1 minute time frame to ensure that there is a shift in market structure on one of those time frame. Okay, so let's go to 15 minutes. Let's see what's happening on 15 minutes time frame. Okay, so you can see the pattern we have on 15 minutes. It looks like an engulfing pattern, right? This candlestick closed above the high of this bearish candle. So this is an engulfing pattern. Let's go to 5 minutes. Okay, so you can also see on 5 minutes, we've had several reversal patterns. Can you see it? We had hammer here, we have spinning bottom, we have inverted hammer. 3 candlestick formation, 3 bullish reversal candlestick formation. Can you see it? Also, if you go back, you would see it was a support here. Can you see that? Can you see that? So one can actually risk buying Australian dollar USD. Okay, so one more thing, we need to go down to 1 minute. Let's ensure there is a shift in market structure on 1 minute. Okay, so let's go to 1 minute. Okay, so you can see on 1 minute, can you see on 1 minute there is shift in market structure on 1 minute, right? You can see that from this point. Can you see? This is shift in market structure. And after a shift in market structure, what happens? Price is expected to pull back to fill a fair value gap. And I think it has filled a fair value gap. Can you see we had a fair value gap here? Okay, you see the fair value gap that was formed? And price has already pulled back. You can see price has already pulled back to fill that gap. Can you see that? So one can actually risk buying Australian dollar USD. One can actually go in. Okay, if you are buying, please set your stop loss. Okay, set your stop loss. Your stop loss should be at this low, 6466, 64. Okay, 6470. That's about 35 or 31 pip risk. Okay, 31 or 32 pip risk, which is still okay. 31, 32 pip risk. So it's still a good risk. Okay, so if you're buying Australian dollar USD now, your stop loss should be at this level. Okay, and your first TP, your first TP should be around this level, this high, this previous high. There's liquidity residing at this previous high. So your first TP should be at this level. I hope that is clear. All right, GBPJPY, we'll look at GBPJPY. Let's look at GBPJPY. My bias on GBPJPY still remains bearish for the week. Okay, it still remains bearish for the week. So let's start with the daily. So you can see on the daily time frame, you can see on Friday candle closed as a spinning top. Okay, it's closed as a spinning top, and yesterday candle closed as engulfing. This is an engulfing candle, and this engulfing candle engulfed these candles, these two candles. So what we have here is an engulfing pattern indicating that GBPJPY is bearish. Okay, so that's it on the daily. Let's go down to 4 hour. So on 4 hour, you would see that a fair value gap was created on 4 hour. So I'm expecting price to fill this fair value gap. This is the area I would consider selling. Okay, I'm expecting price to fill that fair value gap. Okay. So another reason for wanting to sell GBPJPY is this. Before the formation of this hanging man, we had a bullish candle, right? We had a bullish candle. And you can see that this candle, this bearish candle, closed below the low of this bullish candle. This tells me that there is more supply. This tells me that we have more bears in the market. The fact that the bears were able to close price below this low. And also, if you go back here, you will see that we had a support here, and that support has been broken. That tells me that supply has exceeded demand. And when supply exceeds demand, what happens to price? Price is expected to drop. Price is expected to drop. So all I'm waiting for, pull back. To some, this will be a break and retest. Break support. After a breakout from support, you expect price to go and test that support that has become a resistance. So to some, that could be a break and retest. Okay, but to those who trade ICT concepts, this will be a pullback to fill a fair value gap. I hope that is clear, Mr. Stanley. I hope that is clear. Okay, let's move to the next pair. Okay, let's just see what's happening on 1 hour and 15 minutes. Okay, so price is still pushing up, Okay. What if price does not go to fill that fair value gap? At what point should you enter sell? If price does not go to fill that fair value gap, you could risk selling if this support is broken. Okay, if price does not go to fill the fair value gap, you should sell. You could consider selling if this support is broken. You would also notice on 1 hour we had a fair value gap here. Okay, so price might also push up to fill this gap. Okay, so that's it for GBPJPY. So let's say price push up to this level, or let's apply Fibonacci. Let's take it from this swing high to this swing low. Can you see? So price is currently at a discount level. So we want to see price pull back to premium, and premium will be above level 50, right? And so we have this fair value gap, and also this. We should work with fair value gap that is at premium. Okay, fair value gap that is at premium. So we should consider this fair value gap. Okay, we should consider this fair value gap. So that would be my take on GBPJPY. I want to see price pull back to this zone before selling. If price does not get to this zone, I want to see a bearish reversal pattern form above level 50. That is when I will consider selling. okay, because it's all probability. It is not certain, it's not guaranteed that it will get to this fair value gap. So if it doesn't get to this, to fill this fair value gap, when you see a bearish reversal pattern above level 50 at a premium level, then you can risk selling. Then your stop loss should be at this level, the high of this candle. That's where you set your stop loss, or a few pips above the high of this candle. Okay, so that's my take on GBP JPY. I hope that is clear, Mr. Stanley. If you have any pair you want us to analyze together, please drop it in the comment space. Let's move to the next pair. I think we've analyzed GBP USD, right? Okay, let's see Euro USD. Okay, Euro USD, my bias on Euro USD is bullish. Okay, is bullish, but I expect it to pull back. Let's start with the daily. Okay, so we had a support here. That support has been broken, right? Yesterday candle closed below that support. So could that be a valid breakout or a fake breakout? I can't tell at the moment if it's a valid or a false breakout. It becomes a false breakout if a bullish candle closes above that support stone resistance. That is when I would say it has become a false breakout. Okay, so for me to buy Euro USD today, a candle must close above 1.0755. That is the support which has become a resistance. Okay, that is when I will consider buying Euro USD. Let's go down to 4 hour. So you can see yesterday candle. You can see on 4 hour, this looks like a Marubuzu. Okay, now you can see the buyers have been struggling to close price above the high of this candle. You can see they've been struggling to close or push price above the high of this candle. You can see that level has been tested twice. So before you buy, ensure that a candle closes above the high of this bearish candle. Ensure that a candle closes above the high of this bearish candle before you buy. That's my take on Euro USD. My bias on Euro USD for today is bullish. Bullish. Okay, is bullish, but I have to wait for a candle to close above this high before I buy. I hope that is clear. I hope that is clear. Let's move to the next pair. Okay, let's just see what's happening on 1 hour and 15 minutes. Okay, so you can see on 1 hour, pay attention here, please. You can see on 1 hour, we had a bullish reversal pattern on 1 hour. This is an inverted hammer, and the next candle has closed bullish. This indicates change in trend from bearish to bullish. Also, the markets closed above the high of this inverted hammer. That tells me that buyers are showing up strong in the market. Okay, now after the formation of this bullish reversal pattern, I want you to also pay attention to this. You would see that a fair value gap was created. There's a small fair value gap. Can you see it? Can you see this gap? Yeah, that is the gap between the high of this candle and the low of this third candle. That's what we call fair value gap. The gap in between the high of this first candle and the low of this third candle, that's a fair value gap. So what's playing out now in the market? I think they just want to fill that gap. They just want to fill that gap. So if price gets into that gap and a bullish reversal pattern forms in that gap, in that zone, then you should consider buying. You should consider buying. Now, if you don't know how to identify fair value gap, just apply your Fibonacci tool. Just apply Fibonacci. Take it from this swing low to the current swing high. Wait for price. You can see price is currently at a discount zone. And when price gets to a discount zone, you wait for a bullish reversal pattern to form. at the discount zone, that is when you would now buy. Okay, it's not a must that you are able to identify what's it called, fair value gap. If you cannot identify fair value gap, just apply your Fibonacci tool. Wait for price to pull back to a discount zone. Then when price gets to discount zone, wait for a bullish reversal pattern. It could be inverted hammer, it could be bullish engulfing, it could be doji, it could be spinning bottom. Once you see those patterns at a discount, then you consider buying. I hope that is clear. Let's move to the next pair. If you have any question, please drop it in the comment space. Let's see what we're happening on 15 minutes. So on Euro USD, what I'm waiting for now is a bullish reversal pattern. Once that gap is filled and a bullish reversal pattern forms on 15 minutes, I will take a buy on Euro USD. Okay, and if I'm buying Euro USD, I need to let you guys know where I will set my stop loss. Okay, my stop loss will be at the low of this candle or a few pips. Let's say 10 pips below the low. That is where I will set my stop loss. 10 pips below the low of this candle. And my TP will be at this level. This is where my TP will be. My first TP will be at this level. Second TP could be at this level. Okay, so because there's liquidity residing at those levels. Okay, so that's where I'll set my take profits. So if you look at the risk reward, the risk reward is as high as 1 to 3. Yeah, the risk reward is very, very high. So that's a good setup. That's a good setup. Okay, so my bias on Euro USD today is bullish. Australian dollar USD bullish. GBP USD bullish. Let's look at USD card. USD card is negatively correlated with GBP USD. So I'm considering selling USD card today. So you can see on 4-hour time frame, see the pattern we have on 4-hour time frame. You can see the pattern. This is an engulfing pattern. This is an engulfing pattern. Now, after the formation of this engulfing pattern, I'm sure a fair value gap was created on 1 hour or 15 minutes time frame. So what's price doing now? Price is trying to fill that gap before it continues with its bearish move. It's trying to fill the fair value gap. But let's go down to 1 hour. Let's go down to 1 hour. So we would see a fair value gap on 1 hour or 15 minutes. Let's check 1 hour before we switch to. So you can see on 1 hour, we had a fair value gap here. Can you see this? So you can see now that the fair value gap has been filled. You can see on 1 hour, the fair value gap has been filled. So if the current candlestick closes as an angry man, if it closes as an angry man, that tells me that sellers are showing up in the market. That tells me that there's a high probability that price could start dropping from that point. Okay, but I would patiently wait. I'll patiently wait for price to close below the low of this bullish candle. That is when I would take a sell on USD card. Why? If you go back here, can you see this? Can you see this? This candlestick, the low of this candle is the same thing as the low of this bullish candle. Can you see that? The low of this bullish candle is the same as the low of this bullish candle. So if sellers are able to push price below this level is a key level. It's a key level because the low of this candle is the same as the low of this candle. So if sellers are able to push price below that level, there's a high probability that price will keep dropping. There is a high probability that price will keep dropping if they are able to push the price below that level. So that's my take on USD card. That's my take on USD card. That gap has been filled and there's a high probability for price to start dropping. Okay, and if you are selling, please always set your stop loss. Always set your stop loss. Also, you don't have to execute all these trades. You don't have to execute all the pairs. Okay, just pick one or two. Okay, pick one or two. If it is Australian dollar USD you want to trade, trade Australian dollar USD. If it is GBP USD you want to trade, trade GBP USD. You don't have to trade all the instruments. Okay, so your stop loss should be at least 10 pips above the high of this candle. 10 pips above the high of that candle. Okay, and your TP, your first TP could be at this level. Your first TP could be at this level. Then this could be your second TP. I hope that is clear. I hope that is clear. Mr. Ludu, I don't think I can answer your question in this session. Please, how can I identify key points? Okay, when a level has been tested twice, for example, a support or a resistance, when it has been tested at least 2 times, that level is said to be a key level. I hope that is clear. When a support level or a resistance level has been tested at least 2 times, it is a key level. Or when a support level has become a resistance or resistance become a support, that level has become a key level. I hope that is clear. Sorry for that break. Sorry for that break. Okay, so let's look at one or two more instruments before we end this session. Let's look at USD JPY. USD JPY. Okay, my bias on USD JPY is bearish, but you can see for some time USD JPY has been bearish since the second of February. It's been it's been ranging. It's been ranging. It has been in a range. Okay, so far this is the high, and this is the low of the range. And since my bias is bearish, price needs to break out from the low of the range. Okay, price needs to break out from the low of the range. So what I'm waiting for now is for a candle. A candle should close below, 4-hour candle preferably should close below the low of this range. That is when I will consider selling USD JPY. And you can see also we had the low of this bullish candle, the low of this bullish candle that formed before this candle that looks like an hanging man. Okay, so this zone must be broken for me to consider selling USD JPY. I hope that is clear. I hope that is clear. So I think that will be all for this session. You have any question or any instruments you want us to look at? We've looked at USD CAD, USD JPY. Which other pair do you want us to analyze? Mr. Nayo, Mr. Oludu, Mr. Stanley, which other pair do you want us to analyze? Let me know. If there are no questions, I would have to end the session. You have any question? Any question? All right, Mr. Oludu. Okay, all right. I really appreciate you all for your participation. Okay, tomorrow we'll be meeting again, same time, 10 a.m. Okay, I wish you a profitable trading day. Please ensure you apply proper risk and money management. Don't over leverage, please. Don't over leverage. Take it easy on your capital. Take it easy on your capital. You definitely make the money, but don't rush it. Okay, don't rush it. Those who rush it most times crash. Okay, those who rush it most times crash. Don't rush it. Take it slow and steady. That is the way to win in this business. Do have a great day.